How can the UK's National Health Service balance the need to give an excellent level of patient care on one hand with very restrictive budgets on the other? How can our professional service firms balance their clients' needs with the need to maximise income? These kind of tensions are more and more prevalent in today's business world. New research led by Cass Business School and Oxford Said Business School academics looks at one of the world's oldest financial institutions, Lloyds of London. It suggests that balancing these competing demands can actually lead to superior performance. Today I'm joined by Cass Business School Professor Paula Jarzabkowski to discuss. So first of all, Paula, for those people who aren't that familiar with Lloyds, can you tell us a little bit about the institution?
Lloyds of London is a unique marketplace. It's been going for 300 years, which is successful by anybody's standards. The things that are quite exceptional about it is that you have a range of competing reinsurance firms sitting around it, and every day they come into this central marketplace, Lloyds, to trade deals, big capital deals face to face, that underpin most of the risks around the world. So if there's a tsunami or a hurricane anywhere in the world, you can be sure that a Lloyd's underwriter is part of the capital on that. So what we have is these competitors who exist in this marketplace, and yet they come together in what is really a very old gentleman's community and has been for a very long time.
And what did your study actually examine?
We were looking at underwriters' practices. We'd been actually asked, because Lloyds is a bit unique in that it's still a face-to-face market where people meet with their brokers who bring all the deals from around the world to this set of very specialised professionals in London. And they meet face-to-face, which is not like other markets where it's just done by email and phone. We're trying to understand what is the value of this face-to-face. And we found some very unusual things that we wouldn't expect. So we literally sat with people side by side. So they'd come into their offices between 7 and 8 in the morning, and they'd be just what you'd expect of a commercial person. Running analysis, looking at the capital allocations for their company, thinking, is this a good bet? Should I be involved in it? And then sort of around 10:45, everyone would just start putting on ties, shining their shoes, rolling down their sleeves and going into Lloyd's. And as they'd hit the ground from the lift, out of their own companies, they'd fall in step with their brokers, their friends in other competitor companies, and the conversation would change from, what do I want to get out of this deal, to things about how's your wife, what happened in the rugby, would you like to go to golf this weekend? And then they'd arrive in Lloyd's, which is this trading floor, and they'd sit down and they would be doing a lot of negotiation on deals, but it would be done in a very social way. They'd break up to go for lunch. There was transparently a lot of trust and friendship between these people who are actually competitors who want bigger market share from each other. And so we were looking at why is it that this trust and friendship is preserved when actually each of these individuals, their bonus comes from how well they compete for their company. And what we began to find is that both the community they're in and the social networks, which have 300 years of origin and roots, provide them with a lot of important things that can help their commercial business, but at the same time they need to remain accountable. So we started to talk about that as segmenting. When you're in the office with your sleeves up, doing analysis, you're a trader, you're very commercial. When you put on your gentleman's clothes and you go to Lloyd's, you're about social relationships, trust, behaving in an honourable way. And sometimes that might mean that you need to do something, what we call bridging, which is there's benefits in being in both communities. So you might hear news. If you're a nice person, you get offered more business. If you are inside the social networks, you hear news, you hear gossip. And I don't mean anything that would be commercially confidential or, anti-competitive. I just mean you hear a bit of news about what's going on. Now, if you hear that, you can then use that commercially. You might ring your analyst and say, look, can you run the models again on that? When I come back tonight, I see that deal a bit differently now I've heard what's going on in Florida. So we began to call that bridging, being able to use the information from one place in the other place to help make better commercial decisions or to help strengthen social ties that bring you business. At the same time, you can see the risk of that in a financial market, that there could be some sort of unethical behaviour or inappropriate behaviour for investors. And we found a very strong sense of what we call demarcating. These individuals knew when to draw the line, how much to give a favour, how much to privilege a friendship, and at the same time, always keeping in mind that they're responsible to their shareholders and indeed to their own bonuses. And we did see that perhaps less experienced players, those who are still new to it, might sometimes overstep that boundary. And then, they would actually be sanctioned, so their colleagues back in the office would feel they hadn't done things right. And so we learned to call this segmenting, bridging and demarcating, which are the ways that you can live in two seemingly contradictory worlds, but get the benefits of both without overstepping the boundaries.
How can your research apply to other areas of business or institutions?
Well, I think that in a modern world, which is pretty complex, we all know that businesses face contradictions. I mean, obviously some of the prevalent ones that we see in the media all the time are things like the NHS, where they're increasingly, budget constrained, and yet at the same time, they're required to give a very high quality of professional care. And so what we tend to see always in the media is just where people get that wrong. So when in their concerns for efficiency and getting patients out of bed, they're sending them home at midnight or leaving them on a trolley too long. But I think what we miss is that many of these people are actually very skilled and compassionate carers who know exactly how to bridge those competing demands. And if we understood those people who are very good at it, we could improve the practice that bridges across these contradictions. But I think we have many other examples. Investment banking is, for example, where they have Chinese walls where they're not actually allowed, so they're kept segmented when perhaps there would be benefits to those who are doing the trading being able to share with those who are regulating them better ways to understand and regulate their practice. To be honest, I think we even see that in things like our big utilities, which have Chinese walls between their distribution networks and their downstream networks. And sometimes perhaps those arbitrarily imposed segmentations, if we could let these people do the bridging, we'd actually have better service delivery, better service implementation. So I think that we can show that if a financial market like Lloyd's can do that for 300 years and be very successful, it hasn't collapsed despite some very wobbly bits, then perhaps there's lessons to be learnt for these other organisations rather than just imposing bans on them being able to bring together these contradictions and release the benefits.
Thanks very much for your time.